Perhaps the most memorable encounter I've had with anyone.
Welcome to the Own Your Commerce podcast, where leading experts, brands, and innovators reveal strategies for e-commerce growth. I'm your host, Jay Myers, and this show is brought to you by Bold Commerce. Shaun, it's so great to have you on our podcast. Thank you for taking the time to be here. I know you've got a rich background in payments. I'm really excited to dive into everything payments with you today. Can you give us a quick intro to you and highlight some of your background in the payments area?
Yeah, perfect. Thanks, Jay. Really excited to be here. Obviously, the partnership with Bold and sort of talk more generally about payments for you and your listeners. About myself, I've been in the payment space for over 10 years. Most relevant, currently, I'm the head of commercial for Link Money. We are a account-to-account or open banking payments scale-up in the US, so helping merchants have pay-by-bank or account-to-account in the US. Prior to this, I spent 4.5 years at Adyen in the US working on big enterprise and Adyen for platforms deals. So, worked with a number of different big names that most people would probably know. But yeah, just a lot of payment experience and excited to chat.
So give me a little bit of background on Link Money, which is where you're currently at. Describe Link Money, what it is to the audience.
Yeah, so Link Money is a open banking payment method. So it's a way for shoppers to pay directly with their bank account in an e-commerce environment. For merchants, it's effectively a button on checkout that says something like pay by bank or add bank account. And then when the shoppers go through that flow, they select the bank account they want the funds to come out of. So you can kind of think of it like the digital equivalent of cash instead of paying with a card. It's a way to, just take funds directly from the bank account. It differs from ACH in that ACH traditionally has a 2 to 3 day lag, meaning it's not really suitable for e-commerce, whereas ours is an instant decision, meaning that merchants know right away. It's basically the equivalent of a capture on a credit card. Merchants know right away if that's a good transaction or not.
Interesting. Okay, so it's not ACH, it's bank to business.
It's account to account or pay by bank.
Account to account.
It's a bank-based payment method, and we say that like it does in the background ride ACH rails right now, but over time as networks in the US, the real-time networks such as RTP and FedNow, as they continue to evolve, like we can connect into them as well. So effectively it's a bank-based payment method. And from a consumer perspective, they just see the funds coming. They select their bank account and then they see the funds coming directly out of the account that they've selected.
Okay, so just for someone listening to get a visual of this, they're potentially shopping online. They go through checkout and they can choose to pay with their bank, and they see their bank account, or do they see credit cards, or just their checkings and savings accounts, or do they just not have it pre-connected, or what does that look like?
Yeah. So good, really good question. Ultimately, like on the merchant checkout, the merchant might be displaying credit card, PayPal, and then pay by bank, for example. So it's a button, like a payment method. When the shopper clicks that, they are then redirected to their bank to log in. So if it's on your mobile device, it will like open your banking app. With the big banks these days, it's all biometrics. So you would just Face ID straight in. However you would normally open your banking app, you would just go on that, and then you would select the account that you want the funds to come out of. Then, you go back to the end of the checkout page, confirm your purchase. So basically going through that linking flow with your bank account is the same as typing in your credit card details or whatever. That's actually also a one-time flow for merchant or for the shoppers, because we create a token from that, same as you would get with a credit card. If you're a subscription or recurring merchant, you get a token of that card. With us, you get a token of that bank account. So for subsequent transactions, the shopper doesn't actually need to go through that flow again. They just need to link their bank account one time, same as you need to like add your credit card one time, for example.
So you could do subscriptions through Pay by Bank.
Yep, 100%.
Interesting.
And that's like a big target for us for a number of reasons. One, obviously Pay by Bank overall is cheaper, like in any scenario. So that's a big reason. But with subscriptions...
Yeah, what is the rate for merchants?
It varies.
How does that
but
work?
Generally speaking, merchants are going to save anywhere from 100 to 200 basis points. So depending on, what they currently
compared to
cards. Yeah, exactly.
Okay. Like the first thing that comes to my mind is we're big in the subscription space at Bold, and credit card dunning, like every month around, I think it's on average around 9% of credit cards don't go through for various reasons. Like it could be that it's some fraud detection, or there's no funds on the card, or expiry dates, or different whatever. So I imagine payment approvals must be a lot higher with this.
You're 100% right. Like that's the secondary benefit for subscription and recurring companies is if you have a bank account on file, the churn of that account is dramatically lower. There's actually studies out there in the non-profit space, so donating to your favorite charity or whatever. If you can get a bank account on file, those non-profits get between 4 and 6 months extra donations versus
Crazy.
a card. Yeah, specifically for what you said, it doesn't even have to be fraud, like lost, stolen, expired credit cards and anything like that. We've all had a good example, right? I'm Australian. I've been in the US for over 10 years. I've had like 20, 30 different credit and debit cards, right? For various reasons. I've had the same bank account for 11 years. Like that has not changed once. So if you can get, as a merchant, if you can get that on file, you've got a much stickier customer.
Can you incentivize? I know there's laws around, like in the US, you can't, they're like bait and switch laws. Like if you post a price for something, it's $99. You can't then, when a customer gets to the cash register, say, oh, you're paying by credit card, it's an extra 5%. The price you post is the price you post. And then as a merchant, you absorb whatever costs are associated to how the customer pays. Could you, like what's going through my mind is, could you discount? I would want to incentivize my customers to connect their bank. And so if my subscription is $99 a month, or save an extra 5%, because I know, like, if the data shows that customer, like you just said, with those charities sticks on average an extra 4 to 5 months. So they're worth 30% more LTV than a customer with a bank. Like I would want to give them a 5 or 10% discount for connecting their bank. Can you do that legally? Like give discounts by different payment methods?
Yeah, as far as I'm aware, you can. Like discounts again.
You've never heard of any issues with, or is that happening right already?
Yeah, like merchants are already like offer, and it doesn't have to be a straight discount. What you were describing at the start with cards is surcharging, and that's a little bit different. Like there's certain industries where by MCC code in the card space, like Visa and MasterCard say, hey, if you're in this industry, you're allowed to surcharge. Generally speaking, they have to be able to accept an alternative payment method though. So that could be, cash or something like pay by bank. So there has to be a way for the consumer to actually pay the original $100 and not pay $105 with a surcharge or something like that. So, this is an option that merchants can put in and say, hey, pay by bank and pay $100, pay with credit card, pay $105 or whatever the case. So, but again, that's dependent on MCC codes. Not every merchant is allowed to surcharge, to your point. Specific to discounts, yes, that's a huge way that merchants can, and again, especially in subscription and recurring, because you've got a longer LTV of that customer. It's not just $100 jacket or something like that and save 1%. Like, as a shopper, are you really going to do that to save $1? Maybe, but probably not. Where subscription and recurring gets really interesting is, like you said, it could be a straight discount. It could be free delivery on your next order. It could be like pay for 3 months in a row, get your 4th month free, like pay with your bank account. We're even seeing merchants do things like sweepstakes, like add your bank account and pay with your bank account and go into the draw to win. So there's lots of different ways that merchants can incent this. We help and we give ideas and playbooks and that side of things to the merchants or to our partners. But ultimately, the merchants know their customer best and kind of know what those customers are probably going to want to either switch or do this for the first time.
Can you increase the amount charged a month? So if a customer, you said a brand can get a token to charge against $29.99 a month, and they charge that bank each month. And now that merchant wants to upsell that customer their subscription to a more expensive one. Is it a set amount that isn't agreed in that token, or can that vary?
No, the token can vary. So it basically, what we've tried to do is create this payment method that acts as much like a card as possible. So merchants are still very used to how it acts on the back end. So that token, again, it just represents that shopper and their bank account. So if one month you want to charge 29, if the next month you want to charge 50, if the third month you only want to charge 10, like it's fine. It's just that you just send us the amount in the payment request and we process it and decide if it goes through or not. Exactly the same as it would for a credit card. You would send that token, the issuer would say yes or no, and that's that.
And it never expires like a credit card.
I don't want to say never, but yeah, people can close their bank. But yeah, there's not a hard expiry set on it yet.
As long as that bank account is open, like 20 years later, like that subscription could run for 20 years if that bank account is still open. Which
correct. There's no set expiry. Like every card has a set expiry. A bank account does not have a set expiry.
Right. Like I'm sold. We could end the episode right here. I mean, of course we're going to go on, but in the subscription industry, that is huge. Okay, I want to go back to a little bit of not basics, but you mentioned open banking. You talked about that. It's probably people listening that have never heard that term before. What is open banking? How does it work?
Yeah, it's a bit of a interesting term. It doesn't have a single definition, I guess. And really, like, if you look at markets like Europe and Australia, open banking, in quotes, has been around for quite some time. Going a bit into payments geeky stuff, PSD2 in Europe mandated that open banking had, financial institutions had to provide open banking basically and a way to access these bank accounts. So ultimately, like what it is the ability for fintechs like ourselves or other banks or that side of things to access the data within the bank account of a shopper. So when someone links their bank account, they agree to give us access to that account data, and then we can see their credits and debits, for a certain period of time. So what that means is you can build products on top of that. The classic use case, and over 70% of the US population has used open banking in some form. The classic use case is PFM or personal financial management. So if you think of the apps like Mint or even doing your taxes these days where with Xero or whoever you like link your bank account and then it scrolls through it, like that is an example of open banking. What we do is open banking payments and we actually like move money with it. But ultimately open banking is just access to the bank account and seeing the transaction data. Consumers, the next question is usually around like, why would consumers do this? Or what happens if they don't want to have their account accessed or anything like that? You can, as a consumer, go in your banking app and then revoke access to it. So it's very consumer permissioned, very consumer driven in that you can see the list of everyone who's accessed your bank account and decide whether or not you want them to continue to access that. And each time with Wells Fargo, who's my bank, each time I link an account, I actually get an email as well saying, hey, you've linked your bank account to this merchant.
Okay, so it just keeps getting better because I use open banking for sure for a lot of fintechs like budgeting tools and accounting software. I actually use Mint as well too, but I don't use it a lot for payments yet. So if it's used for payments, and I'm as a consumer, I mean, I would see like if I'm buying from Nike and I see them in my bank, I would see they have access to bill or something, and I can go in there, and most banks have an option to revoke access.
Correct. Yeah. So you can see that it depends on the setup. You can see the merchant or the fintech. Like, so you would either see Nike or Link Financial, or maybe like both Nike via Link Financial. It kind of depends on how the bank displays things and that side. But yeah, ultimately, as a consumer, you can be like, oh, Netflix, like I no longer want Netflix to access my bank account. Like, and that's a way to cancel a subscription. So it's good for the consumer, maybe not as good for the merchant on that side of things.
I bet you that's actually good for both because so for the consumer, yes, I think a central place to like a lot of subscription companies are good. They're fine. They have, and there's laws starting to come into place that the effort it takes to cancel a subscription has to be equal to the effort it takes to subscribe. And so if you have like a one-click subscribe, you have to have a one-click cancellation, and you can't have to force people to phone or hide the cancel. Anyway, so like it's getting better, but there are still ones like try to cancel your New York Times subscription or your Wall Street. It's impossible. You actually have to phone, and I hate that. And so, but you're saying if I used my if I paid through bank, I could just go in and turn it off. I see that as a huge benefit for the customer, but I also see that as a benefit for the brand because so I've been a merchant a lot of my life, and there's a lot of customers that they're too lazy to call to cancel or ask for a refund, and they just go to their credit card and they just dispute a charge. And it happens a lot. It's unfortunate, but then that ends up coming as a chargeback. And if you get a certain percentage of chargebacks, depending which credit card processor you're using, you actually get shut down. And it's a low threshold. Like it's like less than 1%.
I think it's 0.5% for Visa or MasterCard and like 75 basis points for the other. I don't know what's what, but yeah, certainly it's below.
Right. 1%. And I hear my friends sometimes they'll say like, yeah, I ordered this thing and I tried calling the company and I just, you know what, I'll just dispute it with my card. And I say like, well, no, don't like do that. That causes a lot of headaches because I've been on the other end because then they have to like dispute the chargeback and file a bunch of paperwork and it's a big headache. But if someone just deactivates the merchant from being able to charge, I imagine it also doesn't have that same negative effect that a chargeback has.
Correct. There's no fees or anything like that. We would send a webhook to the merchant or to the partner, like in this case via Bold, but for Bold merchants or directly to the merchant. But yeah, so the merchant would just receive a notification of some sort that shopper has now unlinked their bank account. So at next time they come back, you can ask them to relink their bank account. You can ask them for a different payment method, whatever the case. But yeah, there's no chargeback fees associated with it or anything like that.
It's so civil and peaceful. I like the way because it's not a black mark on your record where if you get 10 customers that do that, you no longer can charge a subscription or you no longer can. But if you have 100 customers and 1 or 2 customers file a chargeback, you're over the threshold and you'll get a letter. This happened to me once 15 years ago. You get a letter from Visa saying you no longer can process Visa, and then you have to fight it and explain why and show that you have a return policy. And anyways, it's a big headache. We got through it, but that wouldn't have happened with direct bank payments.
Correct. And to your point, yeah, you could probably, as a merchant, design a process where, if the shopper has their bank account linked, you can just say, hey, you want to cancel your subscription, go to your banking app and unlink the account. And then it probably saves the merchant some time and resources as well. Like if you had that on your FAQ page or something like that.
So what's the potential downside of it? Like, why isn't it fully adopted by every brand?
It's very nascent in the US, like being completely honest. As I said, like it's been around in Europe and Australia probably for like 6 to 7 years, maybe a little bit more or less, depending on who you talk to. There's no obviously like clean date for it. And Europe evolved in the same way. Initially, open banking was used for data, was used for financial management and that side of things. And then payments came into it. So, there's companies in Europe like Volt and TrueLayer and Boodle and a number of others that do open banking payments. But really here in the US, there's very few companies and we're one of the first to be doing it. So really like the past couple of years in my role at Link has been a ton of merchant education, like just letting merchants know that, hey, this actually exists in the US now. So we're starting to see a shift. I'd say the last couple of years have definitely been a lot of education, but within the last sort of 3 or 4 months, things have certainly moved more from education to selection and implementation. So it's really just getting the word out and explaining, that this is a possibility. And that's why we're so excited about partnerships like the one we have with Bold, purely because, you have a ton of merchants that can benefit from this. And we're excited to keep getting the word out.
Yeah, I can see a ton of benefit. Does it come up? I guess one thing that I could think why maybe a customer wouldn't choose it would be they would rather put the money on a credit card to pay it later. Is there any worker solutions for someone who wants to use bank payment but buy now, pay laters or timed payments or things like that? Or is it a one-shot?
It's a one-shot thing at the moment. And yeah, so the question that usually arises, and this ties back to your previous question as well, is like consumer adoption in the US. Like there is a lot of credit cards in the US. And the usual question, we get a variation of that question you just asked. The usual question we get is like, why would I pay with my bank account when I get rewards points on my credit card? So the breakdown of that is like 30% of cards in the US are debit card anyway. So they're coming straight from a bank account. So, there's not much difference there. And then of the 70% of credit cards, like not all of them offer rewards. So, you're talking a pretty specific subset of people who play the rewards game, get their points and all that side of things. So that's from the consumer side. Like people who value their rewards, are constantly churning cards for the rewards, all that side of things, they're probably not a target for Pay by Bank. But then I heard it expressed by a merchant really well at a conference last year. He ran payments for a quick service restaurant chain, a very big one in the US, like you would know them. He said his issue with credit cards and credit card reward points was that people would go to his restaurants and buy things and accrue points, but then they spend those points at the airline that their card is at, or, general other things, that they never spend those points at a quick service restaurant. So
Right.
His whole thing was like, if I had a way or a payment method that I could incentivize my own rewards points, then I'm going to do that. Because ultimately, like that's a way for, again, another way of incenting the customer is with rewards points. But yeah, ultimately, why would a consumer do this? There's a number of reasons. Like one, credit card interest at the current rates is insane, like approaching 30%, right? So if you're trying to budget, there's a whole movement away from credit cards at the moment, like just spending exactly what you have. And then from a fraud perspective as well, it's actually better for the consumer because you don't have that card floating out and about on the internet or anything like that. It's much more secure, like it's bank grade login when you're logging in to add your bank account. So there's a number of different options. And funnily enough, so far we've seen an increase in ATV for our merchants. People paying with bank pay at a higher amount than with card. We think, it's theorizing here. We think that's due to the fact that consumers may be close to their limit on their cards, or have maxed that limit, or they don't want to max that limit, but they do have the funds in their bank account. So instead of paying off that card and then, doing a 2 or 3 step process to pay that off, they can just pay directly out their bank account. Again, similar to like having cash in your wallet. You're just like, oh, here you go. Like instead of like paying off your card first.
Well, on that note, is there a limit? Like, I mean, I know there's probably people that have a credit card with $1,000 limit and they want to buy a $2,000 TV. Is there a limit to direct bank payments? So
what we do, how we make it real time is we guarantee the payment at checkout, like for the merchant in real time. So we are effectively taking the credit risk. So if you send us a transaction, we say, yes, we'll accept that transaction. So we're acting kind of like a card issuer in that regard. If we accept it, we guarantee it. What we do then, where's that guarantee amount? It's on a merchant by merchant basis. So, some merchants, we have a $500 guarantee limit. Other merchants, we've got a $20,000 guarantee limit. So, it just depends. And then the merchants will only display to those tickets under $500 or tickets under $20,000 type thing. So, and what changes that limit? Is it what's in their account or how often they purchase, or is it? No, that's on a merchant level, not on a shopper level.
Oh, sorry, that's a merchant level.
Exactly, yeah. So in your example, if someone only has $1,000 credit card limit, they're trying to buy a $2,000 TV, and with that merchant, we've got a $5,000 guarantee cap, then yeah, that would be completely fine. Like that $2,000 transaction would go through, assuming they had the funds in their bank account.
Gotcha. What does a merchant have to do to raise their limit? Is it just history or?
Yeah, it's mainly history. So our model, that decision engine that decides whether we want to accept the transaction or not, it's on a merchant by merchant basis. So we need some time to learn, statistically significant number of transactions, usually 1,000 or 2,000 transactions. And then our model learns a bit about their customer base, how risky it is, like, are we seeing, fraudulent attempts or all that type of thing. And then, then it's just a discussion from there.
Interesting. Do you have any data on demographics that use it other than, like you mentioned, you're seeing some higher AOV? I'm curious. I know the younger generations, a lot of them are not getting credit cards, or they're, like you said, there's a trend towards like cutting the card and just spending what you have. And do you notice it skewing towards any specific demographic?
It does skew younger, I would say. And that's just sort of by way of payment method adoption. Like if you look at payment methods over time, like PayPal was adopted, and then Apple Pay and Samsung Pay were adopted, and then the buy now, pay laters were hugely adopted by the younger generation. So it skews younger. But as I said, like 70% of Americans have interacted with open banking in some way. It's not our study. There was a study recently that said like 60% of Gen Z, I think, are willing to pay with their bank account, and 25% would definitely pay if there was some form of reward attached to it or something like that. So, there is surveys and that type of thing. Our specific data, we don't have demographic data just yet, because we don't really see much on the underlying shopper aside from their bank account.
Yeah. Is it safe to say it is as secure as logging into your bank? Like when you place an order and you then go through your bank login, if you have two-factor, you have two-factor. If you have biometric, you have biometric. But is it exactly the safe? Like if I'm explaining this to someone and saying like, well, is it secure? Well, it's as secure as logging into your bank. Is that a safe statement?
Because you do log into your bank. Like we will redirect you to your bank to log in. So whether that's the app, whether that's online, like whatever the case, like you are logging in with your bank. We don't see that username and password. We don't see any of that. We've just got connections in the
that
bank.
happens on the bank's domain. Correct. And then when they select their account, then it sends the token and then the funds are transferred after. But interesting. So then is there less fraud? Then is it more secure than credit card?
Yes, 100%. Like definitely more secure, way less fraud. It's much, much less likely that, someone's going to have your banking credentials and be able to log into your banking account. Like extreme example, but obviously you can buy like a list of cards off the dark web, right? And penny test those cards and those sort of things. You can't do that not that I'm aware of, with bank logins. And then taking it a step further, if someone does have your bank login details, they don't need to penny test and they can't buy product and do chargebacks or anything like that. And if they did, you're going to notice it. So even if someone does have your bank details, they're probably going to drain that account as quick as possible and not go and buy a $100 jacket or something like that, or subscribe to a subscription or anything. So yeah, it's kind of like double layered protection, but we see dramatically reduced fraud. And that's not to say there is no fraud. This is a new payment method. Obviously, fraudsters are, as I'm sure you know, extremely clever. Like they try and find loopholes and that side of things. That's what they do. But yeah, generally speaking, fraud is much, much lower than with cards.
Yeah. I mean, just personally speaking, I think I've probably had my credit card compromised half a dozen times in my life in one way or another. And I have to, report it as stolen or the card number somehow. But I've never had my, knock on wood, never had my bank account compromised. And then I have very secure login procedures on that. But the card number is, I think, a lot easier. There's 100 different ways someone can get that. Browser plugins or can get hacked or different things. But this is your bank, and everyone should have two-factor authentication on login. And to me, I would think that would be a big. If I'm trying to reduce fraud as a brand, you probably haven't seen someone go completely to pay by bank, right? Like it's still an option with credit card, but incentivizing people to use it more to lower the overall percentage of fraud, that probably would be a strategy if I'm thinking about that the right way.
Yeah, 100%. We see adoption ranging from like a few percent up to 30, 40%, depending on the merchant, depending like how they can incent it, depending if the shoppers kind of already made their decision that they know they're going to be using that merchant for that product. Like it's not a discretionary purchase. So there's a number of different things. And, there's a few small merchants we work with where they're sort of startups themselves and they just add this in as the first and only payment method. And later on, they may decide to add cards or something like that, like a wallet funding scenario or something like that. But yeah, generally speaking, you've now hit on the three main benefits of cost savings, churn reduction, fraud reduction. And yeah, like the fraud reduction will, to your point, will depend on the adoption rate. But ultimately, the more over time you can move across, the more fraud is going to reduce.
And the merchant gets the money at close of that day from Link Money, not from the bank, but Link Money transfers the money to the merchant.
They get the money from us. Yeah, it's not always same. It's rarely same day. It's more so their standard settlement time. Standard is T+2, but it can be a bit quicker. So it's basically the same as cards, right?
Similar to a card.
Exactly.
Yeah.
But they know in that instant that decision, that payment, when we approve it, they know that that's good funds. Same as the capture on a card, they can release, the product, the goods, whatever they need to do and not have to wait for 2 or 3 days like a traditional ACH to clear.
And refunds work the same way. If you need to refund a customer, it just sends the money back then, or sends it to Link Money, and then
Exactly.
Link Money sends it back, or how does that work?
Yeah, it just reverses the transaction. So instead of us doing a credit pull from that token account, you just say, hey, can you credit this? Here's the token. Can you credit this account? So yeah, just the reverse flow there.
Gotcha. Do you always use Pay by Bank whenever you have the option when you shop online?
I should say yes, but no, I don't, being completely honest. Depending on what it is.
So you want to get some of the points, right? Is that why?
Especially if it's but it's, as I said, it's very nascent. I think I would use it more if it was on more merchants. So, but yeah, like our bigger merchants, I definitely use it on.
Well, and probably, if you added up the total number of interest paid on credit cards for people who carry balances versus total number of like air miles redeemed, it's probably 100 to 1 of interest paid. Like the money that credit cards are making on interest that's why they have these rewards, right? It's they want you to use the card and you miss a month or you pay a little bit late. So like in the long run, you're probably guaranteed. I mean, you talk to like all these financial advisors, they'll say, don't forget the points, just pay. You'll always be ahead. Even if you miss just 1 or 2 payments a year, that wipes out any benefit from any points. That's like most. Now, there are some people that never miss a payment, and okay, there's some exceptions, but it's probably safe to say for the average person, you're going to be ahead paying from your bank. And what I'm curious to see is if as this becomes more adopted by brands, if there's other benefits, like me as a brand, if I'm saving 2%, or up to 2%, 1% to 2%, that's huge. And I know that customer is going to have a higher LTV, lower churn. If it's a subscription, I would incentivize them in other ways. Like if you pay by bank, earn double the loyalty points, or get entered into a draw, or get a subscribe and save discount and stuff. So I think we're going to see, well, I should be asking you this, but do you think we're going to see the industry adopting alternative rewards so those airline or air miles won't mean as much in the future?
Yeah, I think so. And I sure hope so. I think obviously it's not going to be instant. These things take time, but yes, like there's already merchants out there thinking about it in that way. And going back to your previous points, there's multiple studies out there that credit cards are not worth it, like not worth the points or anything like that. And it's actually very skewed demographically in that the people who can least afford to pay it are actually subsidizing the people who can most afford to pay it. Like the people who can get the credit card rewards points don't need them. They're the ones with the higher incomes. They're the ones with money in the bank, all that side of things. And then it's the lower income who are paying the interest on these that are actually subsidizing. So it's very like there's a lot of inequality in credit card reward points as well.
Yeah.
But yeah, like there's many studies out there that prove that rewards points over time aren't really worth it.
So if you just want to screw the system, pay with your bank.
100%, yes.
Is this available in every country? I know open banking has country by country. We're in Canada.
Yeah.
I know I think it's all fully available here now. Canada was a little bit later to adopt it than some other countries, but what does that look like?
Yeah, I think it's more in the developed nations. Like Link Money, for example, we are only in the US for now. The US is the hardest market to build it in because it is so new. So we've focused on that. As I said, it's been available in Europe and the UK for 5 or 6 years, same as Australia. Canada, I'm not sure on the exact timings, but to your point, like open banking exists there as well. There's other countries, like Brazil has something called Pix, which is like a real-time payment network that has crazy adoption if you look at those statistics. India has something like called UPI, similar story there. So there's a number of countries out there that have real-time or open banking type payment. So it is all over the world, but there's a number of countries that don't have it either, but it's certainly like transitioning towards that. A lot of it depends on how dispersed and complicated their banking system is. And the US is one of the most dispersed and complicated with like 9,000 different banks and credit unions and that side of things. So it's hard to get all the connections that you need to get decent coverage.
Is there a centralized service for, like in Canada, we have like 5 major banks where It's very different than the US.
Similar to
US,
Australia,
there's probably thousands of banks. So like the Citizens Bank of North Dakota, where there's like 3 branches and it's privately owned. Are they all connected to one service that allows open banking, or the banks have to be opt into this?
A bit of both. There are what's called data access networks out there, where these data access networks have agreements with the banks, but those banks still need to expose their APIs so these data access networks can connect. Or you can, as a fintech, like try and go to each bank individually and get that. But obviously, to your point, there's thousands of banks and institutions out there. So like you could do it over time, or you can do a hybrid. You could work with data access networks and then connect directly into the biggest banks. Because while there are thousands of banks in the US, the top, I want to say 6, maybe it's 10, banks have like 70% or 60 to 70% of all US checking accounts. So, just with the top 10 banks, you can get pretty good coverage. Here at Link Money, we cover 94% of checking accounts in the US. And that remaining 6% is basically what you just described, very small credit unions or those type of things in rural areas.
Yeah. Your uncle that owns a bank in...
Yeah, exactly.
Like a private person can open a bank in the United States, right? Like if you have enough reserve, I think you can open a bank.
Yeah, we got slightly off topic. I think
it's
you
been
can
on a
open
tangent.
a bank. There's new laws. Like at my previous role, Adyen was one of the first to get a new banking license in a long time. But you can buy a bank. So if there's already a banking license that's been issued and you have a spare few $1 million or whatever that bank is for sale for, then yes, you could buy that bank. But to get a brand new charter is quite difficult.
Okay, and anyone listening should not take this as official advice. We know nothing about opening a bank, just for the record. So what does this look like in 5 years from now? I mean, like you go back 5 years, this kind of wasn't really a thing. It seems to be gaining some momentum. What do you see the future of payments for online commerce? What does that look like in like 5 years from now?
Specific to open banking, like I think it's much more common, much more accepted. And even last year alone, you saw announcements and companies that added this. Lyft, Airbnb, Uber, StubHub, they all added pay by bank in the US last year. So merchants of that size who have hundreds of people on their payments team who are constantly looking at, payment innovation, e-commerce, like how to optimize all that type of thing. If these level of merchants are looking into it, then I think you're going to continue to see increased adoption. So, my dream scenario in 5 years' time, like pay by bank is an option on checkout in most major websites and below. Like you have the opportunity to do that as a shopper. Adoption wise, again, it's going to vary on that merchant and that shopper, but ultimately, I think you're going to continue to see this more and more on checkout, like over the next 1, 2, 5 years.
Yeah, I always refer to the Amazon effect on commerce. So when Amazon launches free 2-day shipping, you expect that on every other store you go to. If they don't have free 2-day shipping, what the heck? When Amazon launches hassle-free returns, well, you don't have. So does Amazon have it yet? Like that would, I think, tip the scales.
They do have a way that you can pay with your bank account. It's very clunky, and I don't think it's displayed to all shoppers in the US. It's like you need to manually input your account and routing number, and which no one knows.
Okay.
But you need to type your address in and that sort of thing. So I think they probably realize it's clunky and are probably looking at other things. But technically, they do have it. It's not the best experience right now. But yeah, like I wonder if they're testing it or that sort of thing. But yeah, like we would love Amazon as the client if Amazon's listening.
Yeah, I know a few people there. Maybe I can do an intro. But it's great that people like Lyft and Uber and those are picking it up, because the more and more people that use it in other areas, they just become like you said,
exactly.
70% of people are using it.
As a shopper, when you see it, you're not then curious about it. Like it's good to be curious, but to your point, it just becomes normal. It's like, this is on 10 different websites that I shop at. It's a normal thing now.
Yeah.
Similar to what Apple Pay, right? Like compared to 5-10 years ago, like
for sure. Hey, I'm not I'm old enough to remember when the question was, is it safe to enter a credit card online? So like the first online store I opened was in 1998. And I would, at half the orders I took were by phone because people didn't feel safe entering a credit card online. So like there's always going to be, whenever you're
now it's completely flipped. Like people don't want to give a credit card over the phone anymore. Yeah.
100% is they feel very weird reading a credit card to someone over a phone because are they writing it? Yeah, exactly. Well, to wrap this up, any advice you want to give to businesses thinking about implementing this or taking the next step in bank payments or leveraging open banking and anything you'd like to say to them as some kind of advice or thoughts?
Yeah, I mean, obviously depending on the size of the enterprise and, for bigger merchants, it is a large project. Obviously, adding any new payment method can be large, but ultimately, what we've shown is that the benefits are there around reduced costs, reduced churn, reduced fraud. So we also at Link understand that it's a relatively new payment method. There's a lot of questions out there. We obviously are here to answer those questions. And specific to Bold merchants, we've got the partnership with Bold. If there's, that's a very quick and easy way to get it implemented as well. So it's something that can benefit merchants and their consumers. And yeah, certainly looking forward to continuing to grow it in the US.
Amazing. And lastly, where do you want to send people who are interested in learning more? Can you give us your, website, but then also if they're interested in following you on any social accounts, where can you send people?
Yeah, so the website is link.money, so link.money. My socials, LinkedIn, Shaun Vanderkaap. Hit me on LinkedIn or just Shaun@link.money. Very, very easy to remember.
Perfect. I'll make sure to add all that to the show notes as well. Shaun, this has been very insightful. I learned a lot. I don't say that at the end of every episode, so thank you for that. It was a great having you on. Thank you.
Perfect. Really appreciate it, Jay. Thanks for the time.
That's it for another episode of Own Your Commerce. If what you've heard has helped you in any way, I'd love it if you'd leave us a review in iTunes or Spotify or wherever you listen to your podcast. It's a new podcast and reviews really help spread the word. And if you know someone you think that might benefit from this podcast, share it with a friend. If you'd like to learn more about Bold, visit boldcommerce.com. You can view all our past episodes, and if you have a story you'd like to tell, we'd love to have you on the show. You can apply to be a guest or suggest a guest on our website as well. That's all for now, and we'll see you next week.